You know, it doesn't even feel like a Friday. Is it just me? Been an amazing week, but it doesn't feel like it's over yet. All right. We are risk on around the world. Green on the screen, led by Hong Kong up 2.5%, seems to be their benchmark number when they are up, right? That's what it just seems to go to that. The US markets are down or are up the least. I guess that's a better way to say it. We do have end of quarter today. It's very likely going to mess with the volume flows. Also kind of accounts for some of the flows that we've seen earlier in the week. After this point, I won't be surprised if we start to see the term performance chasing start to show up. PCE index. This is the big one today. It's the last big thing for the week and for the quarter. This is going to very likely set the tone for the rest of the day. And while there are sometimes an economic event, doesn't hold much weight, other times it's a really big deal. I think today it's a really big deal. It wouldn't surprise me even just a little bit. Next week, we have ISM manufacturing. We start getting into jobs. Remember, jobs is a barometer or a tell for how the Fed is doing. They don't like to come out and say that they want to kill jobs, but they certainly use jobs or unemployment as a tell on how strong things are out there and whether or not they've been accomplishing their goals. Remember, we had that spiral wage inflation and companies were using big bonuses to get people to sign up. Jolts was showing that if you left your job, you could go and find another one really easy and probably at a better price. There was a lot of research that had come out and shown that people who had not job jumped were getting left behind in the pay scale by others who were jumping jobs just to get the bonus and the higher wage as a part of their contract agreement to start that new position. All of that was showing the Fed just more and more signals that they hadn't accomplished their goals and that they had a lot of work left to do. So keeping track of these job numbers helps them identify, even in a lagging effect, if they've raised rates enough and or if they need to raise them more. Remember, some of the sell-off, a large part of the sell-off that we saw was after Powell came out and said they didn't have a recessionary forecast for at least 2 years out, which the market heard as, oh, you're not going to cut rates for at least 2 years. And they had to start unwinding those rate cuts that they had already started pricing in. So these job numbers kind of hold a little bit of weight for what's going to go on in the market. And that's next week. You might consider that next week's problem until you look at your portfolio and ask, what are you holding in there? Will it sustain another 5% to the downside from the S&P? To be able to answer that, just run some beta weight in your portfolio and compare what you're holding to a moving SPY. It's going to be a pretty busy day across the board. Nearly every hour has some sort of impact or potential economic event. The funny thing is, it's that way every day. They're just usually not headline enough to show up in these. And if you haven't heard me say it before, the reason that I use different websites and we check different places is because the things that show up here as a part of the economic day is not universally shown on all websites. Some websites only hit the highlights. Some try to get down into the nitty gritty and show you every single thing, and they're still not showing you all of them. There are a ton of economic events every single day that you likely never hear about, and yet you feel the impact of them. Rather than trying to crawl down into the weeds and get every single event that might happen today, and then try to figure out which one of those events might provide impact and which ones won't, just watch the clock. Comes out on 15-minute time frames and 30-minute time frames and 1 hour time frames. You don't see an economic event coming out at 10:18, right? It's 10 o'clock, 10:30. There are 15-minute releases, as we can see here at this 9:45. But even those aren't as popular as the half hour and the full hour. So all you have to do is watch the clock. If you ever doubt that look, you can go to the ES futures, put it on a 1-minute chart, and make the volume the most dominant thing on the chart. Even just straight up hide the candles. Just look at the volume. When I was first getting into futures, a very accomplished trader was showing how to analyze futures for the COG line, right? Those cog lines that you hear me talk about, and how to analyze the markets for those. He was looking at the SPX and he was looking at the futures, and it's a large part was the volume. And it's a really great way to look at volume. It's on that 1 minute. It's about as normalized as you can get. On top of all the economic things that we have on the table today, we are really close to a government shutdown. Now, there's been some rumors that they might get a 4-week or a 6-week kind of interim pause, where they might shut down some government services, but not all, while they try to wrangle all these cats together and get the votes that they need. I don't know if the market's going to necessarily, rip to the upside over that, but it would avoid, the most immediate threat. So keep your eye on the news. That's going to be one of the major headlines to keep an eye on. If they give up, and just call it quits, or if they manage to get some kind of interim very likely that's going to take precedent over even any of the data that we get today. So you can see we pulled off the highs in US dollar Japan. We're on a daily here for a moment. 2 days in a row now, we've pulled away from that high, offering a little bit of a reprieve to the Bank of Japan. Very likely this is not done yet, but that stay of execution gives them more time to develop their plan for how they're going to intervene. And make no mistake about it, the plan is that they're going to intervene. Don't know what that is. It's just kind of driving me crazy. Oh well. When we put it on the weekly, you can see this still looks very bullish. It's a non-stop march to the upside. And it seems inevitable that there's going to be intervention. Now, yesterday we had this move in the last 2 days, the British pound. After this consistent, persistent move to the downside, this is a welcome sight, and the size of those candles are looking pretty good. They're not too crazy, they're not too extreme, but they're maybe within range, a little bit bigger than normal. This is good, it's clean, it's healthy, and as this goes up, we would see the Dixie go down, right? The DXY. So we kind of talked about that earlier in the week, how this needed to find some support somewhere, start to turn around and head back up. Then you got the euro, same thing. That turnaround yesterday, nice tweezer bottom. Now, make no mistake about it, they're still in a continuous downtrend, and we're on a daily here, but take it back to the weekly. That's still very bearish, and the downtrend is still very clean. But when we're thinking about, the Dixie going to the upside, or the Dixie coming off of that 106.5 that it got to in the DXY, to get that thing down off of those highs and kind of back away a little bit, when we're looking around, kind of asking the question, what's going to do that? What's going to help us move that Dixie back? The euro and the British pound were the two charts that showed the possibility of maybe finding some support or being oversold and getting a relief bounce, or any kind of language you want to put in there. We still have Bank of Japan 10-year at that 0.76. It's still untenable. It's completely out of control. You want to keep your eye on this. It's very likely going to be a tell if they do start any intervention. And you could go back and look at what the Japan 10-year did back in October on that day that they intervened, right? If you want to kind of game out what the signals would look like, that's where you can do it. Is just go back to that Friday in October when they intervened and look at what happened in the S&P and in our 10-year, their 10-year. Look at what happened in the Dixie. The S&P moved like 1.5% in 45 minutes or something like that. I did a video on it. It's a fantastic move. I mean, just wow, right? We don't move that far in a day a lot of times. We moved that much before noon. So it's worth putting some time and effort into it, because when the day comes, and it's coming, it'll be a really nice trade opportunity. All right, speaking of the volume, with the end of quarter, the volume is still within range. We have a market maker move today. We didn't have one yesterday, even though we have that elevated volume yesterday, but we do have one today. Kind of implies that there is some hedging going on this morning. They deem the upcoming economic data enough of a threat to go in and hedge. So that's the takeaway from the market maker move, right? When we see that label up there. We did have an inside day breakout, meaning we broke outside of yesterday's level, but we weren't able to keep it, and we came back in again. It might be because that was also last week's low, which is a major pivot point, and we just took a rejection there and came back in. It does kind of highlight the point that we talk about frequently, right? That line there was last week's low. Open, high, low, close is one of the 4 major pivot points. That's a weekly one, so it has more weight. And we didn't just get there and hit it perfectly and fall away. because that's not what we're supposed to do, right? Liquidity resides on the other side of the pivot. So we didn't just get there. We went past it into the liquidity and then got the rejection and then pulled back. We did pull back to the VWAP. So, now we're dancing around with that. But speaking of VWAP yesterday, I don't know how well you were able to time that reversal, and I didn't catch it perfectly, but look how far away we were from the VWAP. And that last little blow off top hurrah with the rally base drop setup was just fantastic. Hopefully you were able to monetize some of that. And, I mean, that's a day done play right there. Gotta love it when a game plan comes together, right? So we are still a long ways from the weekly pivot point. It's very likely we're not going to get there today. It's not a surprise. We are starting to turn a corner a little bit. You can see how since POW, really, since FOMC, we've been staying underneath that daily pivot point just on a day-to-day basis. And between Wednesday and Thursday, we started to change the game a little bit. All right. So on Thursday, we were crossing back and forth through that floor pivot level. And now, at least so far today, while we've crossed through it, we are holding above it. It's the first time since FOMC. So, this could just be a little bit of a relief bounce, maybe, just getting a little bit of a pullback before continuing lower. And there's still a lot of really nasty things going on out there. A lot of bricks in that wall of worry. But that's a good start, right? It's a really good place to consider how much of a base we're going to get in this basing pattern. We're under the 10 and we're under the 20. So any move to the upside has to take into the account that we're going to hit those major moving averages, whether we, consider them support or resistance or anything else. There's still things that price is going to hit, it's going to interact with. And there's still a lot of places, a lot of firms, institutions, and even big traders that will consider those moving averages as areas to make a trading decision, whether we're above it or below it, and which direction they're pointing, and how sharp the slope is. So sure, not support and resistance, but areas of interest, certainly. We do have a voodoo line coming up today. If we continue moving to the upside, this snow line, 43.7150. It's one of the bigger voodoo lines, right? These voodoo lines, they have different levels, just like how you might consider a 30-minute pivot point a lesser pivot point compared to a 4-hour or a daily. And a daily would be lesser than a weekly, right? That kind of mindset. The voodoo lines have that same hierarchy of majors and minors. That white one right there is one of the major ones. So if we do get up to that 43.71 and a half, it's very likely going to be a bit of a struggle to get through there. We've interacted with that level before. So, you've got past history if you want to examine how price responds around that zone. And otherwise, the game plan for the day is to get back inside of last week's weekly candle, which was a massive candle, right? That's just a really big bar. And then we'll focus on next week and trying to work our way back through those levels. 44.35 would be the 50% mark. And as long as we're underneath that level, it's really hard to believe or even attempt to see long opportunities, right? Of course, all longs start by coming out of the lows. And if you're really focused on, trading from the lows or getting in before you've got all of the signals, then an LRE, low risk entry, isn't a bad way to go. Otherwise, you needed to get back at least above that 50% as a good starting point. The 21-day average daily range is 1.07%. We can add the market maker move to it, and that would give us 1.57%. The yellow line here is the full ADR, so that's the 107. If we were to add another 0.5% to that, it gets us really close to that weekly pivot point. So without even snapping a line, we could just say that the upside move would be the weekly pivot. You take that same logic to the downside. Yeah, it's not quite there. 42.73 would be the downside, but I would look at that voodoo line, 42.68. Now, I talked about the different rankings for these voodoo lines. That's in the middle. It's not as strong as the white one, but it's not as weak as the green ones. And if I remember correctly, that's the three that they have, right? The green, the purple, and the white. Ten-day, 30-minute volume profile. When we're at the highs, we expect to go to the lows. When we're at the lows, we expect to go to the highs. We don't really have a classic shape. If we were going to squint and just kind of call it, it would be a classic B. The point of control is still a long ways off, and we are coming up short for any kind of consideration of bringing that point of control down to these levels. We would need to stay here for at least a few more days before we gathered enough volume to bring that point of control down. So it doesn't look like it's going to be moving anytime soon. We do have a nice air pocket or shallow area above that 4380 zone. You can see the shallow area. We move through those relatively easy. We just have to get through that 4380 as a starting point. Then we could focus on 4480, right? It's a nice 50-point shallow zone that we could work through. We don't have a VPOC to bring forward from yesterday because we've already cut through that zone already this morning. $44.05 has a VPOC. That's a long ways off. And $42.25 has a VPOC, but again, a long ways off. So yesterday really kind of cemented that turnaround that we started on Wednesday. At this point, the market would consider this a good start. We're off of the lows that we set earlier in the week, you know, almost 100 points away from that low already. We got a reasonably decent basing pattern. And I think one of the benchmarks for how we end the week is going to be that we can close at least inside of yesterday's range. Even better if we could break to the upside through yesterday's range, but it doesn't owe us that, right? It's a key piece to keep in mind. And if we look at it on the week, looking at the weekly expected move, we're still within the boundaries. We never left. As much as this sell-off might have seemed aggressive or, it wasn't aggressive. It's just nice, clean, orderly sell-off. So we're getting back to the level of where we opened for the week or where we closed last Friday. And when we compare the volume that we had this week, when we compare the volatility that we had projected and anticipated for this week on to next week, you can see that we've eliminated a lot of that volume. And you got to give the market makers credit. Last week, they expanded the expected move for this week. And I think they did a really good job. They got one right for a change. Just keep in mind that the week isn't over and that one of the data points that caused them to consider a wider expected move this week is today's data point. But you can see how much of that volatility we've already consumed and how the range for next week is projecting a lot less volatility. And not for nothing, we do got a higher low on the box. So this box isn't set in stone. It won't be locked into place until 4:15 today, but I always like looking at it on Friday morning and just try to get a feel for what are they thinking about for next week? Where's their head at? And so far, it's looking like lower volatility. I was seeing some people talk about how, quote, oversold we were. And I thought, I don't see that. I don't know. It sure didn't seem oversold to me. But yeah, to each their own, I guess. We're 1.75% below the 10-week. We've certainly been lower than that this year, like back in February and March. Back in August, we were below 1%, but this doesn't seem that oversold. And of course, we are on a weekly. We're looking for this to transition back towards 0, right? For the S&P to go back towards the 10. It makes sense. The 10's coming towards us too. We can see the wave a little bit better when we look at the daily. So we kind of set that low earlier in the week. We've been working our way back towards the 10 at the same time that the 10 is coming towards us. So it's a little bit of team effort. And we could just get to the 10 and, fail to get through it and start another wave to the downside like we've done back here. Or we could be done being underneath it and actually complete a full cycle across the top and through the other side. Just don't know yet. So far, it's a good start. It's a nice turnaround. But now that we're here on the daily, maybe we'll go to a different daily. If you look at the daily and you look at the pattern that we've got setting up, there's still a long ways to go for any kind of confirmed long opportunity. Because we're still inside of this one day right there. And sure, we're above the 50% line. That's a good start. But today's not done yet. So technically, the current candle, it doesn't count until the day is done. So we got to get a candle close above that 50% line, and then that would be a good start. We'd still need, say, getting above it and begin working our way back through these levels. We're IX10 at this point inside that big red bar. But IX10 is is only really a great trade when you're trapped inside a really small bar, not a really big bar. You know, when the bar spans that much space and then we're inside it for 5 days, it's not really hinting at any compression. It's just a really big bar that we can't get out of. So not so great. We are setting up for a TRB and a trade called a bear pennant failure or a bear flag failure. The reason we add the word failure is because a bear flag or a bear pennant, you're supposed to get the flag and then continue to the downside. So if you don't get that continuation, then it failed. And if you think about what a cup looks like, and then maybe a handle, it would first be a trend to the downside. You get the basing, which causes your bear flag. The flag goes too long. So we consider the bear flag failed. Then we get the topside breakout, trend back to the upside, and complete the cup. It just transitions right from one pattern to another pattern to another pattern. So we got Apple up in the pre-market. Amazon, Apple, Google. That follow through in Meta was pretty good. Not as good as I had anticipated, but still, that's not bad. Consider how we closed, you know, at 290. We'll just round up and say 298. And we got to 306.5. That's not bad. From a TRB perspective, that's a failure. A good TRB would have made it back up to at least 308, if not 312 in a single shot. But still, it did pretty good. Hopefully, you know, you guys were able to get something out of that. Google still got this gap to close at 133.74. Not quite there yet, but it's getting close. All of the FANG names are up this morning. It's not just one or two of them. Every single FANG name is up, at least on this list. To be fair, I don't have them all. I'm missing AMD and Snow. I just don't really care for them. So, okay, we'll just go take a look at them real quick. All right. Big move on AMD yesterday. Needs to hold above 101 today. Shouldn't be hard because it's up again this morning as well. It's at the 104. So AMD is actually giving you a pretty nice setup here. When you close more than 50% on that candle, and it's not at the highs, but you know, it's pretty close to the highs. This is a really nice setup because now in the pre-market, as long as we're maintaining in this zone, as we get into the open, you get that little fade back and you bounce on the close and get a rally and get that breakout above yesterday's high. And then there's your trigger to go long and you got all that opportunity to the upside. So it's a nice setup. I don't think I would want it if it starts getting below that 50%. And to be fair, I don't think I would want it if it actually even gets to the 50%. This is a pretty precarious looking candle anyway, since it's so big, which is a momentum kind of a momentum show. So you don't want this thing to pull back. You don't want it to slow down. You don't want it to stop and retrace. And there's a difference between buy low, sell high, which is what we use in trend trades, and then buy high, sell higher, which is what we use in momentum plays. In a momentum play, when the momentum dies, they usually just collapse right back down again, right? Sure, you've all experienced that wonderful feeling, right? When it goes parabolic and then it just collapses. So you don't want to try to catch a pullback in a parabolic play. If we do continue to the upside in AMD, 107.5 and then 110.5. And we got snow. It's the same kind of big bar, nice reversal candle from red to green. We've talked about this gap down rally before. Usually we talk about it in the SPX, but still, it doesn't matter where we get it. That's a nice, really nice bullish signal. You think about how it closed Wednesday, opened Thursday, really fell, and then turned the corner. So we've got an engulfing candle here, bullish engulfing, crossed both sides of the previous day, but also of the day before and the day before. It crossed through all of these and managed to get out. So it really needs to keep this close. And so far it is. We closed at 151 and we're sitting at 152.5. So we're looking pretty good. But now that we're that far outside of the top of this candle, yesterday's high is a warning. Yesterday's close is about as much as I would tolerate. And if we get back inside of yesterday's close, it kind of kills the deal for me. And I wouldn't look for a long trade unless it was able to get completely back outside of yesterday's range. So with another, it's the same thing as what we're looking at with AMD. With such a strong momentum burst like this, you don't want it to pull back and, you know, let you in. And this isn't a trend trade where you buy low, sell high. We do have some gaps to close. Just getting into the gap channel would be a good start here. All right, so that would be getting above that 155. That'd be my target, just to even get in that zone and close inside of it. If we do, then we can focus on closing the gap. Wouldn't be in a single day either, but 158.63. The China ADRs are getting lit up, but I mean, so is nat gas. So, you know, it's not that exciting. Let's go see what's going on with KWeb. All right, IX10 from the 25th. Big bar, so not overly exciting. We're up this morning completely outside of this range. And right now we're actually inside this candle. So we did get a gap close this morning. It just needs to keep it. If we've got the KWeb moving, then we should have names like Baba, yeah, you can see a big gap up in Baba, Baidu, sitting at 135 and having closed at 132. That's a really nice TRB setup with IX10. Got gaps to fill all over the place. Yeah, we closed that one too. Next gap to close is 137.04. And I mean, these things are just big, massive spikes, but not really a lot of flow to it. You can see how there's just little notches. It's not a strong stream of volume. JD is another one. These are all part of the China ADRs, or the China constituents that we look at when we see that KWeb is up in the pre-market. Now, make no mistake about it, these things are in a constant, continuous downtrend. They're not bottom fishing opportunities for long plays and swing trades. We're just talking, you know, some day trade opportunities. PDD is another one. Fits with the whole, you know, China ADRs. All right, we can see consumer discretionaries up, but that's very likely just Tesla. Nice inside day breakout. This isn't a bad setup, especially for a Friday. Kind of gets you primed nice. What we're looking for here is it really needs to keep the close. It would be better if it also just keeps the breakout. So we wouldn't want it to get below that 247.55. If it gets down there and gives us a bounce, that's fantastic, right? That's just about the best you could look for, is that you get that pre-market gap up, come into the open and we bounce, which kind of gives you the trigger for your trade, and then the rally and the breakout above that 249.55, and focus on 50% of that candle. Get through that, get a close above it, above that 50%, that'd be a nice starting point for a turnaround on a long trade for Tesla. That 50% mark is 251.13. You can see we got kind of close to that in the pre-market. That'd be the level that I'd focus on. You wouldn't want it to go below that 246.38. That'd be a bad idea. So we've got a rising tide scenario this morning, which is pretty nice. Keep in mind that a lot of the moves this week that we saw wasn't broadly across the market, right? There were days this week where the S&P and the NASDAQ were down, and yet most of their constituents were not down. We had positive breadth, cumulative tick was up, you know, more issues going up than down, more money coming into the market than leaving, and yet we had the indexes down. That's because the algos were in there hedging in the futures to offset the deltas in their options trade. So with this rising tide scenario, seeing all of these names up and really not getting that follow through in the market, kind of take all this bullishness back and look at something like the ES, the NASDAQ, we're holding those highs well, but we're not really getting that follow through yet. Kind of consider it from the perspective of what do we got to have, or what do we expect to get for the rest of the day, and what that would give us for the week, and then how we're going to end on that quarterly candle. The red line here on the chart is pretty much my line in the sand, 43.65. I really don't think it owes us more than that, and that if we're going to get above it, we need a catalyst. It's got to be something on the economic agenda for the day that would either the government shutdown getting averted, something like that, or we get some good numbers out. Otherwise, that is very likely going to be our ceiling for the rest of the day, and of course the rest of the week. This is a quarterly chart. After the turnaround from October of last year, we've had this really nice advance for the last 3 quarters, and it kind of owed us a pullback. We're still trapped inside of this really big candle. Managed to wick through it, but couldn't keep it. And it just gives us that structure that we use everywhere, right? Because that's the way it goes with candles. Your analysis is fractal in nature. It doesn't matter if it's a weekly, a daily, an hourly. We still use the same tools the same way. So holding above last quarter's 50% mark, so critical line in the sand. And in fact, we came right down and tagged it. For those of you, in my coaching, we've had that talk before. So it held. The expectation now is that we're going to come back up, get through the top of this candle, and work towards getting out of this really big range that we're in. One step at a time. We're ending this quarter relatively well, all things considered, especially after that really strong advance 3 quarters in a row. The monthly doesn't look so hot. $43.50 is last month's low. It's kind of an important level. Really got to believe that closing outside of that isn't healthy. It's not good. It's not a trigger to sell off this market or anything, but if we're looking at the strength of all of this, that wouldn't be good to close below that 43.50. And 50% from the last big candle, 43.38. Got to kind of keep that. This is really weak looking, by the way, right? This is a weekly chart. Get that really big candle from last week. We've got this nice reversal off the lows here. But there's a lot of work to do to get back even just into a position of neutral, let alone a bullish posture. So I think we're just going to focus on closing inside the week. That would be a good start. I think the markets would be accepting with that. 435, 43.57 and a tick. With US dollar Japan pulling back, we often see the precious metals making moves to the upside. So it makes sense that we've got gold and silver up. We should also anticipate crude being down a little bit, but we're definitely not seeing that in oil and gas. It's up. Pot stocks are also airlines. Of course, the usual suspects with cloud, communications, technology, semiconductors. We've got a broad spectrum this morning. It's looking really good. Now, Bitcoin is down. That's a little bit of a wrench in the monkey works. If you think about this for a minute, we had a tight, maybe tight's not a good word. We had a nice correlation with Bitcoin and the NASDAQ earlier this year. They were running at about a 70% correlation. So seeing Bitcoin down 1% and the NASDAQ up kind of throws that correlation to the ditch. Now what kind of thing, you know? So that's not good to see. Also, we've talked about, I've got that crypto list, and that crypto list has semiconductors in it. So we've got this kind of competing force between Bitcoin proxies that are down and other Bitcoin proxies like semis that are up, and tech that's up, and the NASDAQ is up. That could be an opportunity to watch Bitcoin for a turn, right? Kind of open these up a little bit and see what inside the crypto list is actually down. I guess that makes sense. It's none of the proxies. Mara, Riot, Coin, they're all up. So it's just Bitcoin itself. And yet, nope. Okay, there it is. So it just had to take a minute. All right, so there's the Bitcoin down. Not down by much either. It's still holding the lows from, yesterday afternoon into the close. That was a pretty big move yesterday. Makes sense that it's going to digest some of that. And let's do it another way. Needs to keep that 50% mark. If it does that, then it can continue to work on getting back up to this high here. And of course, it's got a lot of work to do to get outside of this big candle back here from the 29th of August. So, okay, the Bitcoin itself is down marginally, but all of its proxies are up. And other than that, it's a rising tide. So that's what I got for you guys. Keep your eye on the clock. Watch the news today. Be really mindful that at any moment, news can come out on this government shutdown, and that it will very likely rock the market significantly. So use stops if you're trading today. Watch the clock. Don't get run over. Have a good weekend, everybody. I'll see y'all Monday.